Let's check out if I can find a great and affordable house right now for my family. Oh well, never mind. Hey, how's it going guys? It is Olivier and today we'll talk about a very important topic, especially for young investors and young families that are looking to buy their first real estate property. In fact, you must have noticed that recently the price of real estate has skyrocketed in the US as well as in Canada. And in fact, the US house affordability has hit its worst point since 4 decades. And add to this, the price of the housing market is far from being the only problem for you if you're looking to buy your first property, because with the numerous increase of the interest rates by the Fed and the Bank of Canada over the last couple of months, well, this has had a massive impact on everyone that currently has a mortgage, where a recent survey has shown that over 20% of all Canadians can't currently afford their mortgage payments. So here's your update on the housing market situation in the US as well as in Canada and how this situation could change dramatically over the next couple of months. But before you start, make sure to smash the like button and subscribe to the channel if you are looking for more personal finance content. Now, when we take a look at the first problematic when it comes to the housing market situation, well, we can notice that it is about the housing price that is way higher compared to what it was 3 years ago. For example, when we take a look at the Canadian house price growth year over year from January 1973 to May 2023, well, we can see that the average growth rate in the price of real estate is about 2% per year. And on its side, the US house price growth from March 1992 to December 2022 has growth on average of about 5.4% per year. So the first thing you can notice is that the US market tends to grow more than the Canadian market in terms of the real estate market. But since 2019, we've seen some massive growth in both markets, where in 2019, the US median home price has increased of over 6.2%, and it has reached its all-time high of about $258,000 for a unit, before to grow even more in 2021 to over 15% of growth. And in 2022, the US median home price has increased of about 11% before to slow down its growth in the beginning of 2023. All of these increases during the pandemic era has made that the real estate market has gained over 38% of value during that period. And it makes that over the last 3 years, the housing market has gained over 12.5% of average growth, which is more than 2 times the historical average growth of 5.2%. And so it is worth notice that this growth isn't sustainable on the very long term, but the problem comes from the number of properties that are constructed every single year compared to the people that are born in the country and that will come by the immigration. Indeed, even if in the US, the housing construction is catching up on the recent decrease of the growth of the population, well, the situation is completely different in Canada. Indeed, Canada Mortgage and Housing Corporation has recently said that at the current pace of the construction of new houses, by 2030, we'll need 3.5 million new houses to reach the affordability point. Concretely, this means that at the current annual house production that is about 261,000 new homes in 2020, it means that the Canadian annual production of new houses over the next 7 years need to be increased of over 300% to be able to produce over 500,000 new homes every single year and to be able to meet the requirements of the affordability. But this is only the tip of the iceberg for the buyers. In fact, even if you can see that over 50,000 houses are available over here only in the province of Quebec, well, one of the biggest problems for the future buyers and the people that currently have a mortgage is from the current state of the interest rate. If you follow the financial actuality, you must know that both the Fed and the Bank of Canada have both increased the interest rate since the last 2 years. And in fact, the interest rate in the US has reached over 5.5%, where in Canada it has reached about 5%. Compared to the initial interest rate of about 0.25% in the US and 0.50% in Canada as of March 2022, well, you can understand that it represents a massive increase. And in fact, those interest rate levels are pretty much the same as for the subprime crisis in 2008, but with the difference that the hike has been way faster in 2022 and 2023. In economics, a global rule is that when you increase the interest rate, it makes that the value and the price of real estate will drop. But when you still have way more demand compared to the current supply, it can cause many kind of difficulties as we currently see in Canada. So there's simply not enough apartments and houses for the people that are currently living in the country. And add to this, the government has increased massively the interest rate, which makes that everyone that currently has a house might have some difficulties to be able to pay their mortgage. Because what happened is that when you increase the interest rate, it makes that everyone that currently has a debt will need to pay more interest, which means that they will also increase the number and the amount of their payments. And so they won't be able to repay the total capital of their mortgage as fast, since they'll need to pay way more interest expenses. But those multiple hikes of the interest rates won't only impact everyone that is a new buyer, but also everyone that currently have a mortgage at the moment. In fact, if you currently have a mortgage that will end, for example, in 1 year, it means that you'll have to renew your mortgages. And so you'll need to renew your mortgage at the current interest rate, which is about 6% and more over here in Canada, which means that your monthly payments could easily double in value. And the bad news for everyone that is concerned is that both the Fed and the Bank of Canada has recently said that they would keep the interest rate super high as long as needed, which means that they'll keep the interest rate as high as possible to lower the total inflation. So in that case, what is the solution to this problem? Well, you might need to get out of this country. No, but for real, as someone that is looking to invest in real estate at the moment, I can understand that many of you might be fearful to invest right now, but I still think that there will always be great opportunities on the market despite of the global economic conditions. I can conceive that right now might not be the best time to invest in real estate for many people that don't necessarily have the money to do it, but considering the fact that there might be other hikes of the interest rate in the future, and to be able to reduce the impact that this kind of event could have on your financial situation, it could be a great idea to try to put upfront on the property that you want to buy more than the 10 to 20% of down payment that is required, which will make that you'll have to pay less interest expenses on all your properties, especially at those high prices. But at the end of the day, we might need to adapt ourselves to this new situation, since the analysts are saying that this situation will stay the same for at least the next 5 years. And they are also saying that the real estate price will continue to grow, but at a slower pace, where the supply of houses will continue to grow as well as for the total mortgages, which will make that at the end of the day, the real estate market will stay super competitive. So at the end of the day, if you don't want to take the risk of it and that you don't currently have the money to invest in that kind of project, well, there are still a lot of great ways that you can make a lot of money in 2023, notably with some great growth ETFs on the stock market. And to discover which funds should you take to grow as much as possible your capital on the long term, check out the video that's going to be right over here, and I will see you soon. Peace!